Good afternoon, students. Welcome back to the session on advanced accounting. We were discussing accounting standard 19, that was on leases in the last session, and today we plan to continue with this and wrap up with this topic. So quickly doing a recap of whatever we have covered so far. First is about the understanding of the leases, wherein we discussed there are two parties, lessor and the lessee. And our objective is to get on to the accounting requirements of both lessor as well as lessee. Now, in respect of this, couple of leases, or you can say two types of leases are available: finance lease and operating lease, over which we had a detailed discussion in the last session. And depending on the type of lease it is, the accounting requirements of both the lessor and lessee will vary. So that's why it's very important to first of all understand what are the types of leases and how do we classify a lease into a finance lease or an operating lease. For this, we understood that the standard helps us to understand how do we classify a lease into a finance lease. Because any lease which is not a finance lease will automatically become operating lease. Now for the finance lease, we understood that there are certain indicators which the standard provides through which we can try to understand whether the lease is a finance lease or not. But basic concept which we need to check in respect of every lease happens to be the transfer of risk and reward attached to the leased asset. If the risk and reward is getting transferred, then definitely the lease is a finance lease. Yeah. And some of the indicators around it we also discussed, so I'm just not repeating all of those indicators. Now, coming back to the accounting requirements around this. In respect of finance lease as well as operating lease. When it comes to the finance lease, we understood that there is one indicator. There is one indicator which requires present value of MLP, minimum lease payments, to be computed, and then to compare it with the fair value of the leased asset. Remember? Yeah. Wherein present value of MLP was compared with the fair value of leased asset. Remember? Yeah. So therein, what do we understand? That over this period, let's suppose if the lease period is 3 years, yeah, and let's suppose every year the lease amount is 30,000. Then what is it that we are required to do? We are required to compute its present. Okay, its present value is required to be computed. Now, in respect of this present value, we understood that it's all about assessing the time value of money, which is inbuilt in these amounts. Why? Because any amount which is, let's suppose, X today will become X plus something after the end of 1 year. Will become X plus another amount after the end of second year, and so on. So now what is this amount which gets added over the period? This is time value. This is time value of money. Or in other words, we can say it's the interest. What is time value of money? That is nothing but the interest. Correct? Yeah. Yeah. So that is time value of money. This is something which we have understood. Now, in respect of this time value of money, or you can say in respect of this interest, one thing that we need to analyze is about the computation of this interest, and we also need to understand that in this arrangement, let's suppose if there are two parties, A and B, who have entered into an agreement wherein B is paying lease rent of 30,000 to A, yeah, So in this arrangement, what do we say? That this amount is actually comprising of two parts. Yeah. One is the principal and second is the interest on this. Why did I say this is principal and the interest? Because if this 30,000 is looked at today, then this will not be 30,000, this will be less than 30,000. Correct? This will be less than 30,000. Similarly, if we look at this 30,000 or this 30,000, in every lease amount, this component of principal will be present, or you can say this component of interest will be present. Yeah. In simple terms, what do we say? In simple terms, we can say that there is an interest component which is embedded in the lease amount. Yeah. Now, at times, we may be required to bring out this interest amount. I'll tell you when is that required to be brought out. And in certain cases, it's not only the interest amount that is required to be brought out. We also need to bring out the interest rate which is embedded in the lease arrangement. Or you can say interest rate which is implicit in the lease arrangement. Okay. Now, what we will do is we will pick up one example, and with the help of this example, we will try to bring out this interest component as well as the rate of interest while computing all of these amounts. But I'm hoping that you have understood as to where we are heading now. Yeah, clear? We are not onto the accounting as yet. We are just trying to understand the concept of this present value, and we are just trying to bring out from this lease amount, this lease amount as well as this lease amount, the present value means the principal, and the interest component, that means the time value of money. Okay. Yeah. So now for this, we should move to page number 1.76, example 1. Yeah, we should move to this. All right, so let's quickly try to understand the fact pattern which is available in the question. And I would request you to hold your doubts. In case you have any doubts, please hold your doubts till the time we wrap up this illustration. Okay. Yeah. Annual lease payments are 50,000 at the end of each year. So what do we understand? That we have annual lease payments up to 5 years. 4, 3, 2, 1 and 0. Okay, every year it's 50,000. Here again 50,000. Okay, and the guaranteed residual value is also available to us. Unguaranteed residual value is also available to us. 25,000 and 15,000. Guaranteed residual value is 25,000. Unguaranteed residual value is 15,000. Correct? You remember these two things are required whenever we compute MLP, and these two things are required to be considered in a different manner while computing MLP for a lesser and lessee. Fair value of the leased asset. Now this fair value is about the fair value of the leased asset. So we are talking about the leased asset. At the beginning of the lease, it's 2 lakh. So over here, fair value is 2 lakhs. Please remember, it's not the present value. Okay, this 2 lakh is not the present value of lease payments. It's the fair value of leased asset. Okay, so if you go to the market and if you ask for the fair value of that leased asset, this is the amount you will have to spend. Now, in this case, there are 2 things we are required to compute. Yeah. First, interest amount in the lease component. Okay, what is the lease amount or the lease component? It's 50,000. So now in this 50,000, we need to compute the interest amount. Number 1. And we also need to bring out the rate of interest using which this interest would have been computed. Understood? Yeah. So this is the requirement that we need to work on. Now in this case, what we can do is, whenever the question requires you to compute interest rate implicit in the lease, we need to assume a rate of interest. Currently, the interest rate is not available, so we need to assume any rate of interest we can assume, and using that rate of interest, we need to compute the present value. Okay. So now, present value of MLP, we need to compute. So we have 5 years. Year 1, 2, 3, 4, 5. And we have MLP plus UGRV. So in the first year, amount is 50,000. Second year, it's 50,000. Third year, it's again 50,000. Fourth year, it's again 50,000. Fifth year, it's again 50,000. Now comes the question around the consideration of UGRV and GRV. If you remember, GRV will form part of MLP always. Guaranteed residual value will form part of MLP always. Whether it is lessee or lesser, in both the cases, it's a part of MLP. So that means we need to consider GRV for sure. So in the 5th year, either you can add to this 50,000 or you can consider it separately. So I have considered it separately. Okay. Next thing which we need to consider is whether we take this UGRV or not. Now, whenever present value is computed, we always need to take this UGRV. So we will always also take this UGRV. When are these two amounts payable? At the end of the 5th year. At the end of the 5th year, because this is the amount which is guaranteed to be paid after the end of lease term. Okay. Then we need to assume a rate of interest. Let's suppose we have assumed rate of interest as 10%. Okay. Let's suppose we have assumed rate of interest. Rate of interest is also called as discount rate. Discount rate. Discount rate is nothing but the rate of interest. Now using that rate of interest, what do we need to compute? Discounting factor. So for the first year, what is it that we are trying to check? If let's suppose we have rupee 1. If let's suppose we have rupee 1 at the end of 1 year. At the end of 1 year we have rupee 1. Then what will be the present value of this rupee 1 as on today? Means what's the present value of this rupee 1? Now for this to be computed, what do we need? Discount rate. So let's assume discount rate is 10%. So this will come out to 0.909. So if you can compute it, you will get this. Okay, so if you will compute it, you will get this amount. Yeah, and I'm sure in financial management you would have covered this. Otherwise, you can also apply the rate 1 divided by 1 plus r raised to the power n. Yeah, 1 divided by 1 plus r raised to the power n. Correct? Yeah. Wherein r is the rate of interest and n is the number of periods. In this case, number of period is only 1. So if you apply this, you will get 0.90. Yeah. Similarly, if we have to check it, in this case, if let's suppose we have to check rupee 1 at the rate 10% at the end of 2 years. Okay, what will be its present value? Means today. So first of all, what do? We will bring it over here. This will become 0.909, which will then be further discounted and it will become lower than 0.909. It will be 0.826. Correct? Yeah. Okay. Now in this case, what I am doing is year on year discounting factor I am writing. Now this discounting factor is for rupee 1. Okay. So it's 0.909. It's 0.826. 0.751. Then we have 0.683. Then we have 0.621. 0.621, 0.621. Yeah. Now in this case, what do we need? We need the present value of this amount. So if the value of rupee 1, or you can say future value of rupee 1 becomes 0.909, then this future value will become what? That's the present value only. That's the present value. So how do we get the present value? This multiplied by this. Correct? So this becomes 45,450. Then we have 41,300. Then we have 37,550. Yeah. Then we have 34,150. Yeah. Then we have 30,000, 31,050. Then we have 15,525. All right. Then we have 9,315. And so these are the present values. And the sum total of these will be 2,14,340. Yeah, sum total. So you can just write down below. Sum total is 2,14,340. Okay, correct? Clear? Now, our rate of interest, which is the rate implicit in the lease, will be such rate using which my present value will become equivalent to fair value. I'm repeating. My interest rate implicit in the lease will be such rate using which present value should become equal to fair value. But currently, what is the present value we are getting? 214,340. Sum of present value that we are getting is 214,340. Okay. So in such a situation, what do we say? That this rate that we have picked up is not the right one. Okay, so we'll have to do some other thing. Now we'll have to think about some other rate. So let's think about another rate. Yeah. So now what we will do is, instead of taking 10%, we will take another rate. We can take any rate. You may be thinking, so do we necessarily take 10% and then this another rate? Let's suppose if we take 14%. So is there any rule? No. Any other rate you can take. What is our objective? Our objective is to keep computing the present value till the time it becomes equivalent to fair value. In the first attempt, it didn't work. We are just actually doing trial and error method. Yeah. Okay. In the first attempt, we have failed. So now we need to try this again. Okay. So again, the methodology will remain same. Now we have to put the discount factors. So this is 0.877, 0.769, and then we have 0.675, then we have 0.592, 0.519. Yeah, and now we need to compute the present value. And we should hope that it works now. 43,850. Then we have 38,450. I would suggest that you should compute this on your own. 33,750. Yeah. Then we have 29,600. Then we have 25,950. Then we have 12,975. Then we have 7,785. And what's the total? Let's hope that we get 2 lakh. But oh, what has happened? We are again not getting 2 lakh. Again we are stuck. Again we have failed. Yeah, we have failed again, because here again, what did we get? Amount which is not equivalent to the fair value. So now what do we do? Do we keep trying this? Answer is no. After 2 attempts, we'll have to think about it. We'll have to do something different. And let's see, now what do we do? Now we have to use the learning of 2 methods. Yeah, sorry, instead of saying 2 methods, 2 attempts. So now what do? Now we'll have to use whatever we have considered, whatever we have seen in 2 attempts. Okay, so our fair value was 2,14,340 when the rate was 10%. Yeah, correct. And this changed to 1,92,360, I guess, when the rate was changed to 14%. So now, in this case, what did we find? That the present value changed by this much amount. Present value was reduced by this much amount. 2,14,340 minus 1,92,360 when the rate was brought down by 4%. Sorry, when the rate was increased by 4%. Okay, so when we increase the rate, this is the change we got. Now what do we need to? We need to apply the unitary method. Unitary method, remember in schools, you would have covered. So now, this is the amount which gets reduced when the rate is increased by 4%. Let's suppose if we have to reduce the amount by ₹1, only 1, then what will be the change in the rate? We'll need 4% divided by this much amount, 214,340 minus 192,360. Correct? I am applying the unitary method. Okay. Now, what is the amount of change that we need? If we take this as the base, so the amount that we need to change is 214,340 minus 2 lakh. Minus 2 lakh. So this is the amount by which we need the reduction. If we take this as the base. Okay. If we want this as the reduction. So now for doing this reduction, for getting this reduced amount, okay, what should be the rate that we need to consider? Very simple. This rate multiplied by this amount. Okay, so this was the rate multiplied by this amount. 214,340 minus 2 lakh. Correct? Yeah. So by this much, the rate has to change. Using this, what do we get? Using this, we'll get 2.6%. We will get 2.6%. Means if this much reduction is required, if we want to reduce this amount to 2 lakh, then the rate increase should not be 4. Okay, this should not be 4. It should be 2.6. How do we get 2.6? If you compute this. So if you solve this, you will get 2.6. I'm just hoping that many of you would have solved this already. Correct? Many of you would have already solved this. Correct? Now, if we are saying that this is the rate that we need to increase by, then what should be the rate using which our MLPs plus the UGRVs in terms of their present value will become equivalent to fair value. That will be 10 plus 2.6. So you can say this will work out to 2.6%. So this will be 12.6%. And now, if you'll go back and if you'll solve all of these the way we did by using 10%, 14%, what will you find? That the present value will become equivalent to 2 lakh. Okay, present value will become equivalent to 2 lakh. Clear on this? Now, this is the method which you need to apply whenever the question will require you to compute two things. One, interest rate implicit in the lease. Now, what is the interest rate which is implicit in the lease? 12.6. What do you mean by this rate? Such rate using which present value of MLP plus the UGRV will become equivalent to fair value. Another thing which the question may require you to compute the interest amount. Now, how do you get the interest amount? Using this rate. So using this rate, you will be able to compute the interest amount. What will be the interest amount? Total value of lease payments minus the present value. Correct? That will be the interest amount. Simple. Okay, now if you have any questions around this, please let me know. So before we move further, let's understand your questions. Okay, Khushi is asking, sir, why did we add 2.6% to 10%? It's very simple, Khushi, because 10% is the base rate. 10% is the base rate. Using 10%, our present value came out to 2,14,000. Now, what do we need? We need such a rate using which our present value will become equivalent to 2 lakh. So, what did we find? Using this unitary method, we computed that increase by what percentage we should change this 10. So, we found it is 2.6. So this 2.6 is not the rate, it's the change in the rate. So what is the change now? 12.6. Please remember one rule. Whenever you will change in terms of increasing the rate, your present value will go down. And if you bring down the rate, your present value will go up. Okay. If you increase the rate, present value will go down. If you decrease the rate, present value will go up. Clear? Quickly, any questions, any doubts that you may have on this, please let me know. Kushi, I'm hoping you're clear on this. Vandana has not understood why the present value should include UGRV and GRV. This is because you have forgotten the concept that we discussed in the last session. MLP always includes GRV. So that means GRV is anyways a part of UGRV. Sorry, GRV is always a part of MLP. This is always a part of MLP. So this is always required to be considered. UGRV, you can remember that whenever you'll have to compute the interest rate implicit in the lease, you will have to take UGRV. Tanu and Khushi are clear on this now. Maman is asking 2.6. How to calculate? So this is something which we have computed up. See, there are two ways. Either you can just mug up this formula the way it's given in the study material. I just explained you the concept behind this formula. It's the same thing the way it's done in the study material. Okay. Pratibha is clear on this. Sharon is asking, sir, why should we compute two discount factors because only then you will be able to apply this methodology. Sharon, please understand, if you will not use two discount factors, you will not get these two amounts, you will not be able to apply this methodology. So to apply this methodology, you will need that. You can say it's a process. So in this process, the first part is to use two discount rates and then get onto this methodology. Clear? Yes, any more questions? Vivek is asking, sir, discount factor किसके साथ equal होना चाहिए? Discount factor किसी के साथ equal नहीं होना चाहिए. The important thing for you to remember is that discount factor should be such using which present value should become equal to fair value. Okay? Pooja is clear on this. Very good. So now what we can do is we can move on to the next example, example number 3 on page 1.78. Sorry, example number 2, please. So we can first pick up example number 2 on 1.77. So we are given the data regarding the lease rents for 5 years, wherein GRV, UGRV is also available. And the fair value is also given. And we are also given the interest rate implicit in the lease. So in this question, if you'll see, most of the information is available. Yeah. And all of this information is similar to what we have seen. Correct? Now, what is it that you are required to do? You are required to assess two things. Using this data, you need to check what type of lease it is. You need to check the type of lease, and then you need to get onto the accounting entry also. Okay, in the books of the lessee. Yeah. So in the books of the lessee, you need to tell the accounting entry. So before we get on to the solution, let's quickly understand the accounting entries that we've passed in the books of lessee as well as the lessor. Lessor and lessee. It's transferred to the lessee, and the risk and reward attached to the asset also gets transferred to the lessee. So that's why lessee will say asset on finance lease debit. Okay. Yeah. Lessee will record the asset. Lessor will stop recording the asset. Lessor will show this as a kind of transfer. And corresponding to this recognition of asset, lessee will say lessee is required to pay the lease rentals. So it will say to finance lease liability. I'm not talking about the amounts right now. We'll get on to the amounts slightly later. Okay. Next. When this finance lease liability will be recorded, it will be recorded at present value of the MLP. So this amount will be recorded at the present value of MLP. Yeah. So next year means at the end of year 1, what will happen? On this lease liability, interest will have to be computed. Lessee will record interest on this. So lessee will say interest expense debit, and by this interest expense, this finance lease liability will increase. What is this interest amount? Every year interest will get added, yeah, and this will increase the liability amount. Correct? And every year some lease amount will also be paid. As a result of which, what will happen? This finance lease liability will get debited and the bank will get credited. Yeah. Now corresponding to this, what will happen? Over here, lessor will record finance lease receivable. Now the lessor, what the lessor has done, lessor is saying lessor will keep receiving the lease amounts. Against this finance lease liability, you can say this is the mirror accounting or kind of mirror accounting which the lessor has done. Okay. And against this, lessee has transferred the asset. So I'm not just writing that. That is not really required. Important thing is to understand over here. End of year 1. This lease receivable which the lessor would have recorded would also be at present value. So that's why what would lessor do? Lessor will book interest income on this. Lessor will say this receivable is debit to interest income. Now this lessee is required to pay. That's why he has booked interest on this, and that interest was an expense. This lessor is required to receive this. That's why it will also book interest, because he will receive this amount with the amount of interest. And that's why this interest will become income for the lessor. And subsequently, what will happen? He will say bank debit to finance lease receivable. So this is how this accounting entry will be passed year on year till the time this becomes 0, or you can say till the time this becomes 0 in the books of both lessor as well as lessee. Clear? You will get more clarity around this concept when we will do some more examples using amounts. Okay. Some of you may have a lot of questions around these accounting entries. Idea was to just make you familiar with these accounting entries. Yeah. Now, as around the amounts which are involved in all of these accounting entries, let's get on to some examples, and with the help of those amounts, you will also get clarity as to how these accounting entries will be passed and how these will be measured. Okay. So that's why what you should do is please hold on your queries for some time. Yeah. So moving further on to example number 2 now. So I'm coming back to example number 2. So in this case, what is it that we are required to do? First of all, we are required to check whether it's a finance lease or not. Now, for checking whether it's a finance lease or not, there are some indicators. First, Does the ownership get transferred? There is no information about it. Second, bargain purchase. No information is available. Third, it's a specialized nature asset. Again, no information is available. Fourth, lease period covers substantial economic life. Again, that information is not available. So 4 indicators we are not able to test. But the 5th indicator, which says present value of MLP should be substantially equivalent to fair value of the leased asset, that indicator can be tested over here. Yeah. So let's compute the present value of MLP in this case. Here 1, 2, 3, 4, 5. MLP is 50,000 each year. Yeah, and the discount factor is also available. Now we don't need to compute this. This is available in the question. 0.890, 0.790, using which we can keep computing the present value. 44,500. 39,500. 0.700. 35,000. Then we have 0.622. And it is 31,100. Then we have 0.552. This will make it 27,600. Yeah. Now, in this case, because we are required to do the accounting of the lessee, in whose books we are required to look at lessee. So that's why along with the MLP is what we need to consider GRV. So in the 5th year, we will also consider GRV. But from the perspective of lessee, do we consider UGRV? No. So that's why we will only consider this. So this will be 0.552 and this becomes 13,800. All in all, this becomes 1,91,500. Yeah, this becomes 1,91,500. Correct? Okay. Now, can you tell me, as per you, it's a finance lease or operating lease? Tell me quickly. Tell me, which type of lease is this? I'm waiting for a response. Mansha, I'll have to come to your query slightly later, please. So which type of lease this would become? Yes. Which type of lease this would become? Pooja, Jit, Khushi, they are saying it's a finance lease. Why? Because if you compare this to the fair value, so fair value is 2 lakhs. What do we find? It's more than 90%. Correct? And I'm sorry, I'm not sure about the percentage though. But substantially it's higher. So that's why, what do you say? That's why we will say it's a case of finance. Clearly, it's a case of finance lease. Yeah? Now, it is clear to us that it's a case of finance lease. So that's why if we have to pass accounting entry for the lessee, what is the accounting entry which the lessee will pass at the time of inception of lease? Let's understand. Now we are looking at the books of lessee only, not the lessor. At the time of inception of lease, what is the accounting entry which the lessee will pass? Lessee will record this asset. Lessee will say asset on lease debit at the present value. 2. Finance lease liability to lessor or to finance lease liability. You can write either way. Okay, either way you can write it. 1,91,500. Clear? Yeah. Okay. Now moving further on to example number 3. So basically in example number 3, what are we doing? We are continuing with this accounting now. And we will now check how these amounts will be computed. If you remember, we discussed that year on year, interest will have to be built up on these amounts. Remember, year on year, interest amount will have to be built up. So in this next example, in a way, we are continuing on this. Yeah, so the fact pattern all remains same. We are not changing the fact pattern. Now we will continue with this. Now what do we need to do? Now year on year, we need to bring out the interest amount. Yeah. Okay. So let's understand how will that be done. So we have 5 years over which this entire part will have to be consumed, or you can say completed, done with. So when we start, what do we have? We have amount equivalent to 1,91,500. You can say it's the present value or the principal. It is 1,91,500. Yeah, that's the amount with which we start. Correct? Now next year, what will happen? At the end of year 1, what will happen? We will build interest on this. So let's compute the amount of interest on this. What is the rate of interest? 12.6. So you can start computing interest on this. So the interest amount on this comes out to 24,129. On this interest at the end of 1 year. Okay, so now we are saying at the end of 1 year, you will say year end. At the end of year 1, what will happen? On this principal, this much interest will get added. Correct? Yeah. Okay. And every year we are required to pay an installment, or you can say the lease amount. This MLP, or you can say it's a kind of installment only, like you see in case of a loan. As I told you, it's a kind of funding arrangement only. So it's a kind of loan arrangement. When it comes to a finance lease, it's a kind of loan arrangement only. Yeah. So this year, 50,000 has to be paid. Now, when this 50,000 is paid off, what did we do? This 50,000 includes this much as the interest, and the balance amount is what? The principal. So that means when this 50,000 has been paid, two things get paid. One is the interest of 24,129, and what is the other amount? Principal. How do we get this? So if we have A, this is B, so this is what? B minus A. This is B minus A, 25,871 is the amount of principal. Now what is the balance amount that remains? So this is C, so this will be this balance. So this was the closing balance that we had, plus the interest, minus this. Yeah, this plus interest, minus this. So what do we get? 1,65,629. So the previous closing balance added with interest reduced with the amount of interest as well as principal. So we get this balance. On this, once again we will compute the interest. This is at the rate 12.6% only. Yeah. So now what do we get? Same thing will continue year on year. So now we have 20,869. Here again we'll pay 60,000. So now what is the principal which is getting paid? 29,131. And what is the outstanding balance? 136,498. Okay. Then once again we'll compute the interest. So it will be 17,199. Yeah. Once again 50,000 will be paid. So what is the principal amount that goes off? 32,801. And what is the outstanding balance? 1,03,697. Yeah. Okay. In the fourth year, now the interest is 13,066. 50,000 once again is paid. So we have 36,934. And the balance amount is 66,762. Okay. Same thing will continue in the fifth year. Now we have interest of 8237. By the end of fifth year, what should happen? This principal should become zero. In the fifth year, this principal has to become zero. Correct? And in the fifth year, we are not only paying 50,000, we are paying 50 plus 25,000. Yeah, so 75,000 we are paying because GRV will come. Remember, GRV will come. So this is including GRV. Correct? Now the balance amount that remains, okay, that has to be this, because this is the amount of principal which has to go off. This is the amount of principal which has to go off. Now in certain cases it is possible that if you compute interest on this amount, it may not exactly match with this. In certain cases it may happen. And that is only because of approximation. Approximation means the rate which we had used for discounting was not the exact rate. Means we have used only to one decimal place. So that's why it's not matching with the exact amount. So here some difference may come, which is allowed. So in the exam, you can give a note. So if you see the study material is also giving a note. Yeah. So there's a small difference, which is fine, and which is because of the approximation in the rates. Clear? Clear on this? Yeah. Now, with the help of this data, we will also put the amounts in the accounting entries. So if you remember, we passed the accounting entry in the books of lessee in example 2. In the books of lessee, we passed the accounting entry at the time of inception of lease. But thereafter, the accounting entries will have to be passed. Yeah. So let's understand how those amounts will be recognized. So this data will have to be used. I have to just clear this because of space, but you'll have to use this data for the accounting entry. But you can say if in the exam accounting entries will be asked, so you will be required to compute these. Yeah, this tabular computation will have to be done by. So year 1 end. What is the first thing you will do? Interest expense you will record. Interest expense, or you can say finance charge. Debit. 24,129. How do we get this figure? We have already computed this. And with this, what will happen? Finance lease liability will increase, or you can say lesser will increase. Yeah, the outstanding balance will increase. 24,129. Correct? Then the lesser will be paid. So we'll say finance lease liability or the lesser debit 50,000 to bank. Correct? 50,000 to bank. And then this interest expense will have to be transferred to P&L. So you'll say P&L debit 24,129 to interest expense or finance charge 24,129. Now some of you may have a question that the terms which I am using are different from the one which are being used. So I would suggest to use the term which is either given in the question. If no term is given in the question, then use the terms which the study is using. Okay. Use the terms which are used in the study material. Other terms are only to explain you, to give you the meaning. Yeah. It's always better to use the same terms which study material is using. Clear? All of you clear on this? Any questions, any doubts that you may have? Now let's discuss. Yes, over to your queries now. Any questions, any doubts that you may have on this? Please let me know. We'll also be solving some more examples. But before we get on to that, let's discuss. Tanu is asking, it's the same calculation like hire purchase, which is good. So it's a kind of revision only for you. Then I think Pooja was sharing the accounting entries. Pooja is saying, how did we get 24,129? You go back to that table. In that table, on the outstanding balance, what was the outstanding balance? 1,91,000 something. You apply the rate and you will get this for 1 year. Yeah. But I think in the third example, we have to assume zero residual value. So in the third example, please remember that we have considered guaranteed residual value. We have considered guaranteed residual value. If you remember, in the fifth year, we have paid 75,000. So guaranteed residual value has been considered by us. Okay. Clear? Tanu is clear on this. Ria is also clear on this. Remember these things are how do we calculate this discount factor? So this discount rate is available in the question. And for the discount factor, we have already discussed. There's a formula you can use. Let me just repeat that point. So for getting the discount factor, what do you get? 1 divided by 1 plus r raised to the power n, where r is the rate of interest and n is the number of periods. Yeah. So let's suppose for 1 year, if you have to compute this, how will you compute this? 1 divided by 1 plus, so 12.6 is the rate of interest. .126 you will take raised to the power 1. So that is how you will compute. Charu is asking, sir, when to add unguaranteed residual value. See, you will add that whenever you will consider it from lesser's perspective. We'll get on to that part also. Okay. Now we can pick up one more example. You can go to illustration number 1 on page 1.82. Illustration 1. S Square Private Limited has taken machinery on finance lease from escalator. Now, in the question, whether it's finance lease or not is already given. So we don't need to check it. Fine. And the information which is available to us is also given. Lease term is 4 years. Fair value at the inception of the lease is 20 lakhs. Lease rent is 6.25 lakhs per annum. GRV is given. Expected residual value means the UGRV. And the interest rate implicit in the lease is also given, 15%. And on these discount rate, on this discount rate, discounting factors have also been computed for you in the question itself. What is it that you are required to do? calculate the value of lease liability as per AS 90. Now, who will compute lease liability? Will it be lessor or lessee? Tell me quickly. Who will compute the lease liability? Will it be lessor or lessee? Over to you. Yes, I am waiting for a response. Much of the concepts remain same. So whether it is about financial management or the accounting, the basic concept, which is, in terms of getting onto this funding aspect, this is always same. This will not vary. Over here, what are we doing? We are using the concept of financial management and passing the accounting entries using that. So this concept arises from financial management only. So accounting is not asking you to use this concept, applying this concept in a different manner. Using the same concept, you are passing the accounting entry. Clear? Yes. Now, can you tell me who is required to book the liability? Is it the lessor or the lessee? Pooja is saying lessor. Vandana, Vrinda, Nitya and Charu are saying lessee. Pratibha is saying lessee. Meman is saying lessor. Now, please remember. Now, this is the most important point. In the question, see, the information around finance lease is given. But when it comes to the accounting entry, you will have to think through who will record a liability and who will record the asset. For the lessor, asset is going out. So lessor will receive the amount. So who will have to book the liability? It has to be lessee. Clear? Now in this question, what is it that you are required to do? Compute the amount of liability and disclose this impact in the balance sheet and the P&L. So now whose balance sheet and P&L you'll have to pick up? Lessee only. Correct? So now let's get on to these amounts. So we are given 4 years. 1, 2, 3, 4. MLP is given 6.25. So these are in. This is again 6.25. But because it's a lessee, so that's why we will consider GRV. So 1.2 will add in the 4th year. So you can say this will become 7.5. Correct? Now this is important because if you will consider lesser, you will also take UGRV, and the discounting factor is also available in the question. 0.8696. Please remember, if the question is giving you the discounting factor, then make sure use the discounting factor equivalent to the decimal places given in the question. Don't cut that. Yeah? 0.7561. But if you don't get this discounting factor, then at least 3 decimal places you should consider. .5718. Yeah, and then you compute the present. So this is 543,500. 472,563. 410,937. Then we have 4,28,850. So the total becomes 18,55,850. Yeah. So this is the lease liability lessee will record. Yeah. This is the lease liability lessee will record. Where will the lessee record this lease liability? In its balance sheet. Correct? Correct? Clear on this? Any questions, any doubts that you may have on this? Please let me know. Any questions, any doubts that you may have on this? Please let me know. After this, we can take a break, yeah, and then we can complete the remaining part. But in the meantime, if you have any questions, Mancha is asking depreciation in the books of lessor, but at the end of finance lease term, lessee will be no. See, because the asset is in the books of lessee, so that's why lessee will claim depreciation in case of finance lease, not the lessor. Okay. Pooja seems to have computed this amount. Great. Any questions? Any doubts? No? So what we can do is, let's take a break now. In the meantime, if you have any queries, please send across them. Okay, so let's take a break. Let's meet after 10 minutes. Huh? Hi, welcome back. So we can now continue on the accounting of the lessor as well as the lessee. Yeah. So now, as regards the accounting that we have discussed so far, it was all limited to the lessee. We also need to get on to the aspects of accounting of lessor, though we have covered that, but we can just briefly touch upon that as well. Plus, we also need to get on to the accounting aspects in case of operating lease. But before that, we can move on to the part which is related to some of the concepts which are linked with the finance lease only. Yeah, so there are some more concepts that we need to discuss. Let's move on to this concept on page number 1.84, gross investment in lease. Gross investment in lease. Now, what do you mean by gross investment in lease? This means sum of MLP plus UGR. Sum of MLP plus UGR. And please remember, in MLP means from the MLP plus the UGR. From these two, if we reduce the time value of money, please remember that both of them include the interest component. So if we reduce the interest component from these two, then what do we get? Net investment in lease. Okay. And this interest component is called as unearned finance income. Unearned finance income. Or you can say from the gross investment in lease. These two are what? GRV. Sorry, gross investment in lease. From this, what do you need to reduce? Unearned finance income. Unearned finance income means interest component in this. Okay. Yeah. Therefore, what do we say? From this, what do you derive? If we have to compute unearned finance income, then from this is what? GIL. You can say this is GIL. This is NIL. From the gross investment in lease, what do we need to reduce? Net investment in lease. What is net investment in lease? In a way, present value of MLP and UGRV. What is net investment in lease? In a way, it is the present value of both of them. Because if you reduce interest from MLP, what does it become? Present value of MLP. If you reduce interest from UGRV, what does it become? Present value of UGRV. Clear? Yeah? You will get more clarity around this concept when we use this practically. So what we should do is we should pick up one more example which is based on this concept. So if you can go to page number 1.85. Page number 1.85, illustration 2. Please remember that we are continuing on the same concepts we have discussed so far. Yeah? So start solving this on your own quickly. Start solving this on your own. Okay? Khushi is asking, MLP includes GRV? Yes. That always includes GRV. I'm just hoping that you've started solving this. Yeah. Prakash Limited leased the machine to Badal Limited. Can you tell me who is the lessor and who is the lessee in this case? Over to you. In this example, who is the lessor and who is the lessee? Yeah. I'm waiting for a response. I'm just in the meantime reading the remaining information. Fair value of the machine is given to us. Lease term given to us 5 years. Lease rental per annum, GRV, UGRV, they are all available. IRR, what is IRR? Interest rate implicit in the lease. Okay, it's nothing but the discount rate. And the discount factors based on this discount rate are also available to us. You are required to compute unearned finance income. Though you are required to compute unearned finance income, but before this, you can just let me know who is the lessor and who is the lessee. I think it's a very simple point for all of you. Yes, everyone, please confirm. Great, I can see a lot of responses. Riya is saying lessee is Badal and lessor is Prakash. And I can see almost same response from Pooja, Charu, Pratibha, Sushil. Prakash is saying Prakash is the lessor. Sorry, Sushil is saying Prakash is the lessor, Badal is the lessee. Same is the response from Vandana, Meman, Kushi, Vrinda. Very good. Okay, great. So now, can you start computing the unearned finance income? Quickly, can you start computing the unearned finance income? Yeah. And then we get 69,608. Okay. Yeah. So now, what is unearned finance income? Sum of these. Sum of these is what? 43 lakhs. And what is the present value of both of them? 28 lakh 30,920. lakh 30,920. So what is unearned finance income? Difference between these two. Simple, easy to compute. So unearned finance income is 43 lakhs less 28 lakh 30,920. Basis which, what do you get? Basis which we will get 14 lakh 69,080. Clear? Simple, easy to solve. This interest component across your queries. Any questions, any doubts that you may have, please let me know. Chavi is asking this unearned finance income, we have to compute from whose point of view, lessor or lessee? From lessor's perspective. That's why we have considered UGRV in this case. Okay. Yeah. Okay, so now moving on to the next part. Okay, that is about accounting in case of operating lease. Accounting in case the lease is an operating lease. Now, operating lease is very, very simple as compared to finance lease. Very, very simple. Let's understand. In case of an operating lease, risk and reward don't get transferred. Correct? They don't get transferred to the lessee. So you can say it's a temporary arrangement wherein one party has taken an asset on lease from other party and paying an amount to the other party. So the party which is receiving the amount will book the income, party which is paying the amount will book the expense. Simple. As simple as that. Let's understand how will this be recorded. Let's suppose a machine is given on lease by lessor to lessee for 3 years. The rent of the machine is what? 30,000. So in the first year, what will lessee do? Lessee will say lease expense debit 30,000 to lessor. 30,000. Lease expense to lessor. And lessor will say lessee debit 30,000 to lease income. We don't have any concept of present value. We don't have any concept of interest. We don't have any concept of computing unearned finance income, interest rate. Nothing is there in case of operating lease. Very simple accounting treatment. Lessee will book the expense, lessor will record the income. Asset remains in the books of lessor. So that's why lessor will charge depreciation on the asset. Now, at the time of inception of the lease, no accounting entry is passed. At the end of year 1, this is the accounting entry both the parties will pass. And now, this will get transferred. This lease income will transfer to P&L. To P&L. And the lessee will be paid off. Sorry, income will be received from the lessee, 30,000 to lessee. Okay, same accounting will be repeated year on year. In this case, what will happen? This will get transferred to P&L, so P&L debit 30,000 to lease expense, 30,000. And the lessor will be paid 30,000 to bank 30,000. All right. Yeah. Clear? So this is how accounting entries will be passed in case the lease is an operating lease. Okay, but another aspect in case of operating lease that we need to remember. Let's understand that. Accounting standard says if the lease amount gets escalated year on year, then the lease expense will have to be recorded. After considering the escalation. Okay, let's understand. What do you mean by this? Let's suppose if I ignore these two entries. Then what are the accounting entries which would have been passed in year 2 and 3? Year 2, same accounting entry would have been passed to lease income. Year 3, here again, same accounting entry would have been passed Year 3, same accounting entry would have been passed. 30,000 to lesser. 30,000. And over here, this would have been lessee debit 30,000 to lease income. 30,000. Correct? So this is the accounting that we would have done if the lease amount was same year on year. But let's suppose instead of 30,000, the arrangement is something like this. Say in the first year, it is 30,000. Yeah. Second year, it is 45,000. Third year, it is 60,000. Let's suppose if the facts were different, and this is within the lease term. So over the lease term, what do you find? In the first year, lease expense is 30,000. Second year, it becomes 45,000. Third year, it becomes 60,000. So there is escalation. Standard says whenever there is escalation in the lease amount, in case of an operating lease, we need to consider the amount in an equalized manner. Means we need to do the straight lining. How do we do the straight lining? Take the average of these three amounts. So what will be the average of these three amounts? 45,000. Yeah. So let's suppose if I change this over here, eventually what was the accounting entry to bank? Yeah, it's one and the same thing. It's one and the same thing. Correct? Similarly, I can change it. I can say bank debit, bank debit, bank debit. Correct? Yeah. These were the set of accounting entries I would have passed. These were the set of accounting entries I would have passed if the lease rent was 30,000 per annum for 3 years. But now, when the lease rent is different in 3 years, so what do I need to do? I need to take the average. Average comes out to 45,000. So if you will compute, you will find average becomes 45,000. Yeah? Yes or no? Quickly. Quickly, can you check this? Average will become 45,000. Yeah. Now, in this case, what will happen? Let's understand. If we look at the accounting of lessee, in the first year, even though the payment is only 30,000, expense that we will be required to book will be 45,000. Expense that we will book will be 45,000, against which we will pay only 30,000. And where will this 15,000 go? It will go to lease escalation reserve. You can say it's a kind of liability which will get created. Lease escalation reserve, 15,000. Yeah? Clear? Second year, there is no problem. Why? Because second year we are booking expense by 45,000 and we are also paying 45,000. There is no problem. Third year, again there is a problem. But now the problem is slightly different. Now we are booking an expense of 45,000, but we are paying 60,000. We are booking an expense of 40,000, but we are paying 60,000. Correct? So where will this 15,000 go? This liability in a way which we created will get debited. So we'll say lease escalation reserve debited 15,000. Okay. So whenever there is escalation clause, we need to do the straight lining. Straight lining means equalize them. Same sort of accounting will be done. Means mirror accounting will be done in the books of lesser. Let's understand how do we do that. So in this case, what do? We will say 30,000 will be received. Lease income will be 45,000. And over here, it will be lease escalation reserve debited 15,000. Next year, there's no problem. It's same 45,000. Third year, payment received will be 60,000. Expense booked will be 45,000 income booked will be 45,000. And where will this 15,000 go? This sort of receivable will get credited. Okay. This is called as straight lining of rent. And straight lining will be required to be done in the books of both lesser as well as lessee in case of operating lease. Yeah? Okay. Clear on this? Pooja is saying average works out to 45,000. Yes. Okay. Clear? Okay, so now moving further on to another concept of this leases. Sale and leaseback. Sale and leaseback. Now, what do you mean by sale and leaseback? This concept, or you can say the type of transactions based on these concepts, are very commonly found in case of aviation industry. So let's understand what do we mean by this. Let's suppose A has an asset. A owns the asset. A owns the asset. Yeah. And A needs fund. A needs funds. A has the asset, but A doesn't have the funds. Now A needs funds. So there are two ways. Either A can go to the bank, financial institution, and get the loan. There is another way to get the funds. Let's understand how can A generate funds now. A will sell this asset to B. Sold to B. Let's suppose this asset is sold to B for 10 lakhs. Okay. There must be some gain or loss in the books of A, which A will record. Now, who owns the asset? B. Who has the ownership of the asset? B. Now, on the same day when A will sell the asset to B, to sell, and A will become the lessee. So now what has happened? By selling the asset which A owned, A would have got 10 lakh. So A has got the funds which it wanted, and A has also got the asset back in the form of lease from B. Yeah. So now this lease could be an operating lease or finance lease. It could be of any type. So I'm not saying which type of lease it is. It may be of any type, operating or finance lease, which will depend on the same factors that we have discussed. If this lease transfers the risk and reward to A, it will become finance lease. Otherwise, it will be operating lease. This situation, or you can say this sort of transaction, is called as sale and lease back. So in a way, it's leased back. Why it is done? It's a kind of funding arrangement through which A has generated funds. So the accounting of lease will have to be assessed depending on the type of lease it is. And the way this lease will be recorded will also be depending on the type it is. And the accounting will be using the same principles that we have discussed already. So we have discussed those principles already. So there is no new principle that I need to tell you. All the principles are same. But over here, because A has sold this asset to B, so there are three possibilities. A may have sold this asset to B at a profit, at a loss, or maybe there is no profit or loss. Means this is sold at par. Par means no profit or loss. Depending on the situation that we have, whether it's sold at profit, loss, or par, standard gives us guidance. Standard gives us guidance. The way to record these three means these will not be recorded the way you will record this in any other transaction. Now, because the sale is linked with the lease back, so that's why treatment of this profit, loss, or at par will be driven by this standard. Yeah. So there are certain situations which the standard explains, for which you may come to page number 1.92. Page number 1.92. Let's understand all of these situations. Yeah. Let's understand all of these situations one by one. First situation, where the sale and leaseback results in a finance lease. Means in sale and leaseback, the leaseback is that of finance lease. In that case, standard says excess or deficiency of sale proceeds. Which sale proceeds? Which A has sold to B. In our example, A and B were the parties. A sold to B. Excess or deficiency of these sales proceeds over the carrying amount should be deferred and amortized over the lease term. Means this should not be recognized immediately, and this excess or deficiency is as compared to carrying amount. Yeah, that should be deferred and amortized over the lease term in proportion to depreciation of leases. This is situation number one. Situation number two, when the sale and leaseback results in operating lease. There again, we can have various types of situations. Let's understand those. Case 1, when the sale price is equivalent to fair value, therein the profit or loss will be recognized immediately. Means, let's suppose A had an asset in its books, carrying amount at 8 lakhs. Yeah, its fair value was 10 lakh. Now, it is not necessary that the sale price will be 10 lakh. It may be 9 lakhs, it may be 10 lakh, it may be 11 lakh. Yeah. So they are saying if the sale price is equivalent to fair value, then recognize the profit or loss immediately. If sale price is less than fair value, profit or loss should be recognized immediately. However, if loss is compensated by future lease payments at below market price, it should be deferred and amortized. Third, if the sale price is greater than fair value, excess over fair value should be deferred and amortized. Correct? So there are certain situations that we have discussed theoretically, but I think we will be able to understand all of these situations only when we apply them practically. So that's why it's very important to come to illustration number 3. So we can go to illustration number 3 on page 1.93, through which we should be able to understand. Yeah, and this can become a bit tricky, so that's why I need your attention. Riya and Pooja are talking about video, so can you please quickly confirm video audio is all clear? I can understand video is all clear, but you may confirm video audio all clear? Quickly please confirm. I think you need to check it at your end then, Riya and Pooja. You need to check it your end. Charu, I'll come to your query slightly later. Let's get done with this example first of all. Okay, so A sold machinery having WDV. What is WDV? Carrying amount of 40 lakhs to B Limited for 50 lakhs. What is 50 lakhs? Selling price. A sold to B. Carrying amount is 40 lakhs. Selling price is 50 lakhs. Yeah. And the same machinery was leased back by B to A. So that means it's a case of sale and lease back. Lease back is operating lease. Now the question itself is telling you that it's a case of operating lease. Yeah, but we are not required to get on to the accounting of operating lease. We are just required to understand how those profits or losses will be handled. Because in case of sale and operating lease, that's the most important aspect. Otherwise, remaining things are all same. Okay. So we are given certain situations and we'll have to check how will those be dealt with. Let's go one by one. Yeah. If the sale price of 50 lakhs is equal to fair value, let's suppose fair value is also 50 lakhs. Situation number 1, A. Okay. Fair value is 50 lakhs. In this case, what do we do? When the sale price is equal to fair value, when the sale price is equal to fair value, what will A be required to do? It's not the accounting of B. No, it's the one for seller. A should immediately recognize the profit. So there's a profit right now. What's the profit? This is the profit. So there's a profit. So this profit of 10 lakh will be immediately recognized by A. Clear? Simple and easy to understand. First one. Yeah? Clear? Okay, great. I can see your comments around video. So video is all fine now. So Sheila has confirmed. Great. Mancha is asking, sir, is it recommended to read annual report of any airline company to get better understanding of financial treatment? I don't think so. But definitely for your understanding, you can just go through that. You will get clear. There's a need to do that. Yeah. But if you want, you can definitely do that. Situation number B. So now, situation number B. In the situation number B, fair value has been changed. Now the fair value is 60 lakhs. Now what do we see? Fair value is greater than selling price. Okay. Now we find that selling price is less than fair value. So if selling price is less than fair value, what do you do? If selling price is less than fair value, what do you do? There again, any profit should be immediately recognized. If there is a profit, it should be immediately recognized. So do we have a profit? Yes. So we have a profit of 10 lakhs. So that will again be recognized immediately. Yeah. So here again, we have got similar sort of situation. Okay. Situation number C. Situation number C. In situation number C, they are saying fair value is 45 lakhs and the selling price is 38 lakhs. So instead of 58, we should take it 38. So the moment we make it 38, what do we get? It results into a loss. Loss on sale. Okay. So now, in the third situation, what do we have? Third situation is the one wherein selling price is less than fair value. But do we have a gain? No. We have a loss of 2 lakhs. We have a loss of 2 lakhs. Okay. Now this loss is to be immediately recognized by A Limited in its books, provided loss is not compensated by future lease payments. Now we don't have any information whether this loss gets compensated by future lease payments or not. Question doesn't specify. That's why what do? This loss will immediately go to P&L, assuming this doesn't get compensated by future lease payments. Okay, clear? Situation number D. Now we need to make the fair value equivalent to 40 lakhs and selling price 50 lakhs. So now we have a profit of 50 lakhs and now selling price is greater than fair value. In the fourth scenario, selling price is greater than fair value. So in case the selling price is greater than fair value, what do? Excess over fair value means excess of selling price over fair value. These two should be deferred and amortized over the period. Okay. So now in this case, what do? This 10 lakhs, should be deferred. This will be deferred. Okay. Deferred means this will be amortized over the lease period. This will be, this is D part. And this will be amortized over the lease period. Correct? Yeah? Pratiksha is asking, how do we calculate profit? Very simple. Selling price less carrying amount. You'll have to go situation by situation. Okay. So moving on to part E. In part E, let's understand. Fair value is changed to 46. Fair value has been changed to 46. Selling price remains 50. So now here again, selling price is greater than fair value. Okay, correct? Now this is a bit tricky, so that's why I need your attention. Yeah? Now, if you look at the profit, what's the profit? 10 lakhs. This profit is 10 lakhs. Why? In the books, it was appearing at 40. It's been sold at 50. Yeah? Now, this 10 lakhs has got two components. This profit of 10 lakhs has got two components. Let's understand what are those two components. If you will find excess of selling price over fair value, what is that? 4 lakhs. This is excess of selling price over fair value. So this is the first component. And the other component is 6 lakhs. You can say balance amount. Yeah. Whenever the selling price is greater than fair value and there is a gain, so what do? Any excess of selling price over fair value means this has to be deferred and amortized. So this part will be deferred. This will not be recognized immediately. This will be deferred. And this 6 lakhs will be recognized in P&L immediately. Okay, clear? So whenever selling price is greater than fair value, what do? You check the profit component. This profit component has got two components. One, 4 lakh means excess of selling price over fair value. 4 lakhs. This is 6 lakhs. 4 and 6 both are profits. But this part of profit will not be recognized in P&L immediately. This will be deferred. And this part of profit will be recognized immediately. Clear? Clear on this? Okay. Moving on to next situation. F. Fair value is 35 lakhs. Fair value is 35 lakhs and selling price is 39 lakhs. Now, if you look at the selling price and the fair value, selling price is higher than fair value. Selling price is higher than fair value, but there is a loss of 1 lakh. There's a loss of 1 lakh. There's a loss of 1 lakh. Okay. Now this loss will again have two components. This loss will again have two components. Let's understand those two components. 5 lakhs. How do we get 5 lakhs? Carrying amount and fair value. Difference of these two. Okay. Carrying amount and fair value. Difference of these two. And excess of selling price over fair value. Or you can say, let me just write it over here. 4 lakhs. Excess of selling price over fair value. See, whenever there is excess of selling price over fair value, how do we treat it? We amortize it. This will be deferred. Similar to what we discussed in previous situation E. Now, because we are deferring it, so that's why what do we need to do? We need to consider the additional amount, 5 lakh. How do we get 5 lakh? So if we are considering this as excess, we will have to make this as loss of 5 lakh. In a way that they become net 1 lakh. So net 1 lakh has to be loss. This has to be loss. So if we are considering this as excess, then we'll have to consider this as loss. Net what we get? 1 lakh loss. Okay. And this 5 lakh, where do we take it? Immediately to P&L. Okay. So this situation number F, you may think is a bit tricky, but don't worry. Don't worry. You need to just revisit this once again if you find this to be a bit tricky. Yeah. Just try to practice all of those situations on your own. As we've discussed, that the best way to understand all of these situations is what? Solve them on your own. So what I would suggest is that after the session, please revise this standard, particularly sale and leaseback. And when you revise this, just go through all of those situations theoretically, and then try to solve all of those questions on your own without looking at the solution. Even though we have solved these, don't worry, it doesn't matter. So you need to solve that on your own. You will automatically start getting clarity on this. Okay, yeah. Pooja is saying it's all clear. E is also clear. Kushi is asking for B again. Sure. So Pooja is asking about AS14. See, AS14 is something that will get covered with amalgamation. So when you will do amalgamation, it will automatically get covered. Don't worry about it. Yeah. Then as regards situation number B. So let me just go to situation number B. In situation number B, what did we... So if you look at the situations, gain will always go to P&L immediately. So that's why we took it to P&L immediately. Clear? Okay, so Sheil is clear on this. Any questions, any doubts that you may have on this, please let me know quickly. Because with this we are done, and we also come to an end to this standard. So any questions, any doubts that you may have, please let me know. And with this, we also come to an end to all the accounting standards as part of this paper. And I'm just hoping that you are all through with the accounting standard, but my request to all of you will be to revise all of these standards. In the exam, these are very scoring, and as you must be knowing that every exam covers a certain question from accounting standards. So that's why these are very, very important from examination perspective also. Yeah. So now, Saurabh is asking, but sir, how can the sales be more than the fair value? It's possible. So it's the transaction between two parties, and the transaction can be at any price which both the parties agree. They can do the transaction at more than the fair value. What's the problem? There's absolutely no problem. Pooja is clear on this. Very good. Thanks to you, Pooja. Vijay is also clear on this. So I think with this, we can just conclude our discussion for today and for this paper also. So I'd just like to thank all of you for your time and for your wonderful participation that you've shown throughout the sessions. It was good. But again, my suggestion to all of you is to just take care of all of these standards and just make sure that you revise all of them. Yeah. I think yes. Yeah, ma'am. This is the last lecture. So we are done with this. Yeah. And you must have also started receiving the presentations. See, the presentations cover the notes. Though I would suggest you to use the notes which I have discussed with you in the session, and some of the notes you would have also prepared. But if you are looking for something more in terms of just noting down the points, then those presentations will also be helpful. And some more presentations will also be shared. Yeah, very soon, within a day or two. All right. So thanks to all of you once again. Thanks for your time. Thanks so much.